你好，现在距离开始时间还有3分钟，主持人正在发言测试。
It's 3 minutes before the webinar starts. The moderator is speaking and testing on the volume. If you do not hear the sound, please check your audio setting. And the presentation will be made in Chinese. And if you need an English interpreting, please push the button at the lower screen saying English channel. Thank you very much.
世界各地的嘉宾大家好，欢迎各位莅临我们 InfoLink 首次举办的线上研讨会。
Distinguished guests around the world, welcome to InfoLink webinar. Today we are going to talk about the PV industry and the ESS topics. Our special thanks to JA Solar and Jinlong Solace for their sponsorship of this meeting. Before we start, I would like to remind you that if you have any questions, you can leave your questions in the chat room. And if we don't have time to reply directly to you in the session, we will get back to you after the meeting. And if you need English interpreting, please click on the button English at the bottom of the screen. 2020 is a very special year, even if this year has been disturbed by the epidemic. The demand for the renewable energy industry is still booming, and the PV demand is still strong throughout the year. In addition, the supply chain products and prices are also changing rapidly. In today's first session, we will talk about PV supply chain, polysilicon, wafers, cells, and modules. We will analyze the market situation next year. And the second session, we will observe the market from products and policy perspective. And the last part will be the debut of our newly developed department. We will talk about the ESS energy storage and offshore wind energy market. Now, let's welcome our first analyst, Dr. Chen, to talk about the PV market today.
Hello to all online attendees. Good evening. My name is Cooper, Senior Analyst at PV InfoLink, responsible for polysilicon and wafer market research. I'm delighted to have a chance to brief you on polysilicon and wafer capacity ramp, supply, demand, and price forecast. Also, because of recent ban on import from Xinjiang into U.S., I will also offer insight into potential impact on PV supply chain. A spate of accidents and floods in Q3 impacting polysilicon plants has inflated originally low polysilicon prices by over 50% in just a month. Not only have mono and poly wafer prices surged, downstream cells and modules have followed, causing some endpoint installations to be delayed into Q1, Q2 next year. Ever since the accidents, the smallest moves in polysilicon may trigger big fluctuations in supply chain prices. Coupled with continued China-US Xinjiang labor issue, a shortage for polysilicon may occur. Hence, PV InfoLink has compiled some insight into market supply-demand relationship for polysilicon and wafer, leading to price trends, as well as analyzing possible strategies to address import by vertically integrated or Tier 1 module makers into Europe and US under the China-US labor issues. I will speak in 4 parts: polysilicon, wafer, Xinjiang product ban, and conclusion. First, on polysilicon. The cause for polysilicon capacity and yield decline this Q2, Q3 is twofold. First, at the start of the year, the pandemic led to gloomy price outlook throughout the supply chain. There was polysilicon oversupply, so mono and multi-grade prices dropped to record lows. So, Korean OCI backed out of PV market, German Wacker reduced operations to 70%. Jingyang in Inner Mongolia, China shut down production. Then in Q3, a spate of blasts and floods at several polysilicon plants caused sudden tightening of polysilicon production, leading to short-term supply shortage. However, factories responded in late September, and between Q4 this year and next year, polysilicon production will rise steadily. This is provided maintenance remains stable and there's no more accidents. Polysilicon capacity is expected to increase in 2021 with gradual ramp-up from GCL Xinjiang, East Hope Phase 1 and 2, and new lines at Yongxiang New Energy Leshan Phase 2. However, based on end module demand, polysi oversupply is forecasted throughout next year. Based on trends in polysi production rise and 2021-22 planned expansions, polysi plants over 100,000 tons in capacity will include Yongxiang, Dachou New Energy, and GCL. Other Tier 1 plants may expand as well, possibly after 2023. Overseas polysi production faces China's low-cost competitive edge and continued expansion. Oversupply in 2021 is expected to cause a downward trend in market price. Polysilicon import to China will also slowly fall, even down to a trickle by 2023. In fact, cost is seen as the key driver in global polysi capacity growth. Chinese polysi plants keep moving to low power price regions like Xinjiang, Inner Mongolia, Sichuan, and even Yunnan. Chinese production with low power price edge will continue to dominate in the future with increasing concentration. Now on polysilicon capacity distribution and new expansion projects. First, Xinjiang accounts for about 50% of China's capacity now. GCL Xinjiang is adding 20,000 tons in 2021 Q1, totaling 60,000 tons. Dachou New Energy adds 35,000 tons in 22 Q1 to give 110,000 tons. Together with TBEA and East Hope, the total is over 300,000 tons. Our internal forecast is between 2021-23, Xinjiang share will stay close to 50% because other provinces are expanding capacity too. Inner Mongolia capacity, 12,000 tons each for Ordos and DL Silicon. Tongwei Phase 2 will also release 40,000 tons in 22 Q3. Sichuan and Yunnan will center on Tongwei Yongxiang. New line at Yongxiang New Energy Leshan Phase 2 adds 40,000 tons in 21 Q4. And Yunnan Tongwei Baoshan Phase 1 adds 40,000 tons in 22 Q1. Other capacity, Asia Silicon, for example, adds 30,000 tons to its 22,000 tons, totaling 52,000 tons. ETA 22 Q1. GCL Xuzhou will boost its current 6,000 tons in granular silicon to 30,000 tons in 21 Q2. Successful financing will further boost it to 54,000 tons. Now on polysi producer capacity and cost distribution. In Q4, Xinjiang polysi plants are returning to full capacity, and annual maintenance is basically done. Cash costs for Tier 1 companies are expected to return to Q2 levels or even lower. The red dotted line you see here is the forecast for Q3 monograde before tax, 62 RMB per kilogram versus 70 RMB per kilo spot price. With this price, overseas OCI Malaysia and Wacker Germany may trim production with maintenance. In fact, we can clearly see this from what happened in Q2 this year. But at that time, full capacity was still maintained for mono producers. Second red dotted line here is the forecast for monograde before tax price for Q3 next year versus 60 RMB per kilo spot price. Chinese multi-grade plants may stop older lines with lower capacity to counter a weak market, giving the price for multi-grade a chance to hold and even reverse its decline. But with this price, multi-grade plants will face a predicament. Those planning to or currently expanding will continue in the hope of an upward turn, but may run out of money ultimately. Alternatively, these expanding producers may also choose to shut down to ease financial pressure, but will then face vast depreciation losses. Summarizing the price trends after polysi capacity ramp. Polysi shortage this Q3 is slowly being filled with Q4 full production. As supply climbs, mono and multi-grade polysilicon prices in Q4 goes back into decline. Between Q1 and Q4 next year, between Q1 and Q4 next year, multi-grade production versus end demand shows signs of oversupply. So mono and multi-grade are expected to trend downward at the end of next year at 65 and 38 RMB per kilo respectively. Based on 70 RMB per kilo for mono, module price is estimated at 1.5 RMB per watt. So based on forecasted trend on multi-grade price next Q1, Q2, module price should stay close to current levels. As new module capacity is released in Q3, Q4 next year, other supply chain capacity will also grow. Module price will begin a gentle decline, and only then will grid parity PEV projects have a chance to break ground. Now, on wafers. This year has seen a split between mono and multi. Total global wafer capacity was over 200 gigawatt, with mono taking up 180 or over 85% in share. Although end demand continues to grow yearly and the market is optimistic, it is still hard to keep pace with mono wafer ramp up. Next year, in all quarters, mono wafer capacity versus end module demand still shows an oversupply. For multi-side, tightening of end demand and share squeezing from mono market lead to continued low demand. Multi-centric Indian market is impacted by COVID this year and showing weak inventory pull-in. Most multi-wafer plants continue to maintain low utilization rate and struggle for survival and cash flow. 2021 multi-wafer production is around 16 gigawatt. Demand forecast is 10 gigawatt with an oversupply still in multi-site. Therefore, tier 1 plants will continue to cut capacity and most tier 2s will base short-term operation on market pricing. Wafer is actually quite similar to polysilicon. In the next 5 years, wafer makers will see significant concentration. As Longji and Zhonghuan continue to expand, wafer capacity by vertically integrated Jinko and JA will also expand in sync with their cell and module capacity. Ramp up by mono wafer plants like Shangji, JYT, and HT Stack, and even new entrants should not be overlooked either. Small tier 2 and 3 plants facing pressure in production costs and poly-side price will gradually fade out. Costs between multi-site wafer plants vary little, and it's hard to rid extra capacity. Those with over 30 million units monthly capacity should manage to survive in this market. Based on Q4 mono wafer capacity distribution, the top 4 account for over 100 gigawatt. The capacity is huge if all the mono-only wafer makers are also figured in. Mono wafer plants with high market share is king. High capacity means a loud voice to dictate market price and even sizes. In Q4 this year, we no longer see multi-wafer makers with over 5 gigawatt capacity, which is a big change from the past. Most multi-wafer makers focus on mid to high performance, but production for all specs will face the same profit challenges. Multi-wafer price with its low margin will fluctuate with end demand and polysilicon price. Now, on non-silicon costs for mono and multi-grade. Mono plants with optimal non-silicon costs are still Longji, Zhonghuan, Jinko, and JA, with mono-only wafer plants trailing closely behind. As mono wafer leaders expand capacity and widen non-silicon cost gap with small plants, non-silicon cost distribution is also widening. Minimum non-silicon cost in 21 Q1 falls between 0.6 and 0.65 RMB per piece. Non-silicon costs for multi is more concentrated than for mono because multi-wafer plants are maintaining a low utilization rate with limited room to cut non-silicon costs. There is little difference in non-silicon costs between plants. Tier 1 non-silicon costs fall between 0.55 and 0.65 RMB per piece. Summarizing price trend after wafer capacity ramp up, driven by local and overseas installation rush in Q4, There's clear supply tightening of mono wafer due to maintenance work, power outage at several plants, less than expected new capacity release, etc., causing further fall in output and tight mono wafer supply. Q4 mono wafer price remains firm. As new mono wafer capacity ramp continues, an oversupply in mono wafer supply is also expected next year versus end module demand. So G1 and M6 prices are forecasted at 2.17 and 2.27 RMB respectively. M10 and G12 prices will be 2.8 and 4.18 RMB respectively. Next, the ban on Xinjiang products. U.S. has a ban on Xinjiang products now, with temporary hold on all products from 5 Chinese makers and 1 vocational training center. Although the U.S. has not banned module import made from Polysilicon or wafer produced in Xinjiang, Xinjiang is a major PV upstream hub. PV InfoLink assessed the possible scenarios. We believe the likelihood of impact is high, and it's possible that as early as first half next year, U.S. may ban PV products made in Xinjiang. China-U.S. trade tension will not change much in the short run. General sentiment in the market is that Biden's Democratic win will not affect U.S.'s tough stance on the Xinjiang issue. The next slide shows PV InfoLink's analysis on the Xinjiang PV supply chain situation versus demand in US, US plus Europe, and all overseas market. By our calculations, between 2021 and 23, if US bans sales and modules made from Xinjiang Polysilicon, non-Xinjiang Polysilicon capacity can still more than fill US module demand. Even if Europe joins the ban, non-Xinjiang Polysilicon capacity is still adequate for US plus Europe modules. Even in the worst case scenario where no overseas orders can use module made from Xinjiang Polysilicon, the supply demand still seems to be balanced for non-Xinjiang Polysilicon. Clear shortage will only surface in 2023, mainly due to most overseas polysilicon backing out and local capacity expansion not catching up with end demand. Since non-Xinjiang polysilicon may be preferred in future overseas modules, polysilicon producers in Xinjiang may choose another production base in China. For example, other provinces, unless they can prove they have no forced labor issues. Failing that, polysilicon from Xinjiang will be in severe surplus. Sources show some vertically integrated or Tier 1 module plants are starting to approach non-Xinjiang polysilicon producers and preparing ahead for the risk of a possible Xinjiang ban. Since traceability is extremely complex, dedicated wafer plants and vertically integrated plants will try to use non-Xinjiang polysilicon at one single plant to simplify proof of origin. Today, with silicon accidents and floods and even ban on Xinjiang PV products, any change may cause a surge in polysilicon price. We see mono wafer plants and integrated plants all signing longer-term contracts with polysilicon producers. Globally, over 70% of polysilicon has been locked in by long-term contracts, and the ratio may yet increase. This is to secure silicon supply on one hand and on the other to avert risk in PV exports. Alliances between leaders this year stands in clear contrast from the past, with the Tongwei-Trina alliance being a prime example. Finally, concluding on polysilicon, wafer, and Xinjiang ban. 2021 polysilicon and wafer productions compared with our estimate of end module demand show an oversupply. The demand is 145.2 gigawatt. So our price forecast for both is a downward trend. The key to market price will be supply-demand will be key to supply-demand balance, and yet that's the hardest to control. Hence, the only strategy for companies is to optimize costs to prepare for a possible downturn. The most likely scenario is US or US plus Europe. This is in terms of bands. We factored in Europe due to its history of trade barriers in many other industries. Adding Europe and US polysilicon demands gives the conclusion that the Xinjiang issue will not affect polysilicon supply. So the price will still assume a slow downward course due to oversupply. Due to traceability issue, non-Xinjiang polysilicon will have an edge over Xinjiang product. Companies impacted by production based in Xinjiang include Daqo New Energy, US-listed 100% polysilicon capacity in Xinjiang, recent investments in high-purity semiconductor project with 1,000 ton annual capacity and PV-grade polysilicon with 35,000 ton annual capacity. Jinko, US listed with 8 gigawatt polysilicon production in Xinjiang. Expected ramp up to 14 gigawatt in Xinjiang may be shifted to Leshan in Sichuan and Xining in Qinghai. With that, I conclude my talk on polysilicon and wafer capacity ramp. Thank you very much for listening. And now, the next topic is cell and module supplier concentration, supply, demand, and price trends. This will be provided by analyst Amy Fang.
Hello, everyone. I am Amy. Following Cooper's presentation, I would like to introduce cells and modules. I will talk about capacities, market development, and price trends. Finally, I will make my conclusion. First of all, let's talk about cells. We will talk about the supply chain. And on the right-hand side, you will see that this is the forecast from 2019 to 2025. And very obvious that the overall mainstream will still be P-type PERC. And although this year we have been impacted by the epidemic and the release of capacity has been moved from the first half to the second half of the year, but still we see this year around 70 to 75 gigawatt of new capacity additions, up 56% year on year, reaching to 205 gigawatt. And also, it seems that manufacturers will not slow their capacity ramps next year because this year, the supply chain price has risen sharply due to the shortage of the silicon materials in the Q3. And this also caused the vertically integrated manufacturers that slow down the expansion of cell production in the first half of the year to replan their ramps. And also, considering the size transition and companies' strategies around 123 gigawatt capacity additions is expected, which is 60% of growth. And also the oversupply of cells become more obvious, and the old production capacity will gradually start to phase out. And also, in terms of multi-site gradually shrinking its space, the main demand country, India, has been affected by the epidemic this year, and the demand is weak. Therefore, Tier 2, Tier 3 manufacturers have stopped production multi-site cells this year. And Tier 1 and vertically integrated companies are thinking about closing multi-site cell businesses. Against this backdrop, multi-site cell capacity may decrease to around 32 gigawatt by the end of 2020, which is a decrease of 20%. And considering there's little room for price drop, of cells. Multi-site cell manufacturers are continuing to run a few lines and gradually withdraw from the market during 2023 and 2024. And we know that the N-type trend will be introduced by the next speaker. Well, but I will only give you an overview of the capacity development of the N-type cell. This year, the P-type PERC will expand its capacity and apply large cell, and per watt costs are still declining. At present, the P-type PERC still has obvious advantages, and the development of the N-type cells is relatively limited. Coupled with the difficulty of N-type technology, this year's makers' investment in N-type technology will slow down slightly. And compared with last year, capacity growth is only 3 gigawatt. Most makers regard N-type technology as a reserve stage technology. So, considering this relationship between demand and supply, we have seen an oversupply of cell capacity since the second half of 2019. In the second quarter of this year, mono PERC prices have fallen rapidly in the second quarter of this year due to the window created by the epidemic. And oversupply will become even more pronounced next year. Prices are likely to reduce significantly in low seasons. Next, the capacity actually highly related to size. The production capacity cells involve the transformation part, and how much individual size can be supplied is also concerned by many people. First of all, let's talk about size upgrades. The upgrades from G1 to M6 production line has been basically completed in the second half of the year. But some manufacturers still have plans to upgrade from G1 to M6 to G12 in order to properly use their remaining capacities. But it is worth noting that capacity invested in the renovation of to or shift to large size is relatively small at this stage. And also, many first-year manufacturers choose to directly expand to M10 or G12, mainly because of the following reasons. Number one, the current equipment investment cost of cells is not too expensive compared to the past. And now it's observed that most selected directly go to up G2 and compatible with other smaller sizes, mainly because if in the future they will be imposed additional modification costs. So now we see that the subsequent expansion of the G12 will be significantly faster. And now we shift to all capacities is a little bit more difficult if the generation or span is larger and a period of adjustment is needed for yield and efficiency. From a cost perspective, most manufacturers opt to install new lines that are compatible with size up to 210 millimeters. Since new capacities will edge out modified line M2 and G1 capacities are expected to be eliminated fast and followed by those that have been modified to M6. Therefore, now we have seen that the words new solar cells will mainly come from first-tier cell manufacturers. An expansion of the cell production line of vertically integrated plants is mostly dominated by top 10 makers. And corresponding to the left picture, we can see that the proportion of first-tier manufacturers is expected to be about 80%. And manufacturers will force the expansion of second-tier manufacturers to slow down. This is a crowding out effect. And also we have seen that from Q2 to Q3, we will see that those smaller size formats will be gradually phased out. And in terms of the cost side, if we deduct the smaller size capacity of M2 and G1, the part we mark with the orange bottom line, the total capacity in the low cost range below 3 cents per watt is about 153 gigawatt. In the first half of next year, the capacity cost of the first-tier manufacturers can even be slightly lower than 2.7 cents US dollars per watt. And then, as a result, the pressure on those second and third-tier manufacturers, which fall at 3 to 5 cents per watt, has increased. It is estimated that the total capacity with a smaller size is about 72 gigawatt. If the small size is deducted, only 39 gigawatt will remain, reflecting the speed of second, third tier manufacturers in converting sizes is slower. Therefore, in the accelerated progress of size conversion, the impact on the second and third tier manufacturers is greater than before. And now let's look at the Southeast Asia. A number of expansion plans have been announced this year due to the change in size, and are expected to be released in the middle of next year. Observation shows that these new capacities are capable of large sizes. In addition to further reduction in cost in Southeast Asia, the overall replacement will also begin gradually, and it is expected that the production capacity range of 5 to 7 cents US dollars per watt will be reduced in the third quarter, and the capacity above M6 will be 12 gigawatt. This will make the US module wattage next year to appear more than 500 watt. Another key is about the external procurement of vertically integrated manufacturers. This year, the price hikes have led the vertical integrated producers to expand their in-house cell capacity considerably and to cut their procurement cost. Therefore, the self-sufficiency rate of module makers and their affiliated units will be at least 80% in the first half of next year. And the cell capacity will again become the most excessive in the supply chain, with price to plunge in the low season. This will speed up the phase-out of Tier 1, Tier 3 cell makers and the older production lines, and stay competitive in their respective size alliances. Cell makers will increasingly work together to complement each other and build long-term business. And when we look at the recent trends, the transition of sizes has accelerated, and the manufacturers have accelerated the supply of large sizes to consolidate their competitiveness strategies. The G1 will be phased out more quickly than expected, with the G1 only able to maintain a small margin in the first half of next year. And the M6 will still have a margin of about 12 to 13% in the second quarter, with the price of 10.6 cents per watt. In terms of the large size, the first half of next year, manufacturers are planning to increase their proportion of large sizes output, but the first half of the year is still in the early stage of large size release. The supply is limited, the price declines lower. It is estimated that the price will come to 11.5 to 11.8 cents per watt at the end of the second quarter. And in the second half of the year, new capacity is expected to be released. And it is estimated that the overall supply in the third quarter will be severe, and the M2 G1 demand visibility is low from the third quarter, and the overall demand is entering the low season. Price declines will not stabilize until the peak season in the fourth quarter. And it is estimated that the output of M10 size will be larger, so the price can approach M6 size. It is expected that the price difference between M6 and M10 in the second half of the year may fluctuate between 0.7 to 1.4 cents per watt, depending on the market supply and demand. And it is expected that the M10 size will be produced in larger quantity, so the price will be closer to the M6 quickly, and the price difference between M6 and M10 may fluctuate. And when we look at the sales, and we know that, and we will see that next year, module production lines in Southeast Asia will shift toward large sizes. And actually, it will be in about 30% increase. And when we see the module, its capacity will reach 383 gigawatt, and only until 2022. And then the annual growth will be slower down. And here, if you look at the green part, we know that in China, we have seen a lot of capacity ramps. And the darker orange side, that is the Southeast Asia, you will also see that because they have the policy avoidance, risk avoidance policy, and they will have an expansion of capacities. And totally next year in Southeast Asia, it will expand to 18 gigawatt. And also, they will have a oversupply to the US demands. Therefore, they will speed up the phase out of the old production line in Southeast Asia. And overall, we were looking at that the epidemic and also the wattage of products change quickly, and therefore that will influence their shipment. And this year, the top 10 largest manufacturers comprises 60% to 70% of the global market in the previous 2 years. And their shipments are forecast to dominate 80% of the global demand this year and over 85% next year. And when we look at capacity, a closer look at the makers can see that the production capacity of the top 10 manufacturers will reach about 60% by next year. In addition, from the perspective of new capacity, more than 75% of the capacity ramps this year and next year will come from these major makers. And the leading manufacturers, Jinko, Longjing, Trina, and the JA Solar will each bring module capacity to more than 30 gigabyte by the end of 2021, indicating an ambitious shipment target. However, with around 144 gigawatt of the estimated global demand next year in China, and we see that the large PV market is entering the grid parity era. Smaller companies will have their market shares eroded. So in addition to the trends that I have seen, the price war actually will see that the first tier companies merge the smaller ones. Now let's look at those modules, and then we will see that, and then the mid-year will be the selection point. And here we see that they will have their strategies to select the type. And starting from Q3, we have exhibition and shows that will bring about the trends of larger size. So we have a 270 millimeter and 220 to 230 millimeters. We will be discussed more. And many M10 camp manufacturers, they are planning to expand to G12 and downward compatible. Even they are preparing for 220 millimeter downward compatible facilities. Therefore, overall, when we look at this trend, it's more unified trend because many new expansion of capacities will focus on the G12 and the downward capacities. Therefore, when we see those small size format production line trying to upgrade to M10, currently because of those capacity is in big quantity, and also the new production lines still have cost and the capacity advantages. Therefore, not many companies or makers, they are selecting to upgrade their old production line. Most of them, I mean the M10 G12 module capacity, most of them are new capacity or the capacity expansion. Therefore, when we look at the cost advantages of the new expansion, those phasing out will be on the slashes parts, slash line part. And here you will see that the smaller size will be the first to phase out, followed by those modified or upgraded to M6 modules. That will already gradually phase out from the market as well. Therefore, when we look at the production capacity M10 plus G12, by the end of the year, it will reach 184 gigawatt. And also there are some certification and the glass bottleneck. And the first half of next year, we will not see a huge increase in terms of orders. Therefore, next year, we will not see the bottleneck in terms of module development, in terms of capacity. And also the price will be very competitive, in a fierce competition. Therefore, we have seen that in the forecast of next year, and because of the modules manufacturers, right now they have been very stable in terms of their polysilicon cells and also the next year's quotation. And we see that after the Chinese Lunar New Year, these capacity will gradually increase. And also, we will see that the M6 modules prices will fall between 20.5 to 21 US cents per watt. And also, that will be a 4 to 5% decrease from the beginning of this year. And also, when we look at the conclusion here, we will see that the main trends of cells and modules of this year is centralized. And now we see that the M6 price will expect to be about 19.5 to 19.7 cents per watt by the end of this year. And also, the M6 prices will get closer to those of the larger ones. We expect is that will be about 19.7 cents per watt. Now coming to my conclusion, and I have talked about all these trends that we say that it's as a highly consolidated or concentrated. So we will see the overall supply demand. Orange is demand here, and we put in the first tier capacities here. So here you will see that we have seen that the first tier manufacturers can satisfy the demands from the market. So the consolidation or concentration is increasing. And also many makers have capacity ramps plan. Therefore, we will see that the oversupply will be more obvious next year. Therefore, we see that those old production line will indeed gradually phase out. And also, the market share competition among different camps will be more fierce. And also, both of them, I mean, the module and the cells, they will also face the oversupply. Compared to previous page, you will see that situation will become even fierce. And also in terms of the external procurement, because they already have expanded their capabilities. Therefore, I believe that the external, the procurement need will be lower. And then I think that facing the trends, the company strategies will be number one, manufacturers will increasingly form alliance in the following 2 years. And also professional cell manufacturers will expand into module business to develop vertical integration. And their differentiation is N-type development and preparation. In terms of size development, most manufacturers, regardless of cell or module ones, opt to install new lines that are compatible with size up to 210 millimeters this year to avoid extra capex caused by another shift in sizes. And given the producing smaller size products with equipment that is compatible with larger sizes will cause production efficiency loss. And manufacturers are speeding up the pace to promote larger format modules. And the manufacturers are expanding capacity for both 182 millimeter and 210 millimeter cells and modules. Therefore, cell capacity is expected to reach 108 gigawatt and module capacity is to 184 gigawatt by the end of next year, 2021. However, demand for large format modules will not grow largely in the first half of next year due to issues revolving certification and the glass shortage. In other words, the development of large formats will not hit bottleneck. This concludes my presentation. Thank you very much for listening.
So that was our presentations on the supply chain. Now we will have 3 to 5 minute break. We will now play a video from our sponsor, JA Solar. And you can also look at our company presentation at the same time. Thanks again to JA Solar for co-sponsoring this event.
那我这边稍微跟大家介绍一下我们 InfoLink， 让不熟悉我们的人也能了解我们。InfoLink Consulting 成立于2017年，我们是一间以研究再生能源为主的市场调研公司。我们借由每年超过500次的业界拜访，来提供及时、高质量的产业咨询服务。随着现在各国的再生能源目标逐步的提升，加上供应链依然是亚洲崛起的时代，相信身处于亚洲的 InfoLink 更能清楚的让全球的企业了解到亚洲市场的竞争风貌。那我们现在已经深入到光伏、储能、风力的各个环节，以各领域的专家为核心进行研究分析，为客户除了为客户带来有价值的定期报告以外，我们也能提供个别客户的咨询服务。目前我们的客户遍及了亚洲、欧洲、美洲以及世界各地。作为亚洲领先的再生能源公司，我们相信在激烈的市场竞争下，市场的情报一定是企业拟定战略的关键的第
As
一步。
Asia's leading renewable market information provider, we believe that market intelligence is key to the decision-making process of a company in an increasingly competitive market. As mentioned before, we have PV InfoLink, and this year we have added ESS and wind InfoLink research. For PV, we focus on supply chain and global scale strategy and market analysis. ESS InfoLink engages in research on global energy storage, especially emerging market. Here, we show our 3 departments, PV, ESS, and wind. In addition to individual reports and regular reports, you can also see here we provide consultancy and also on-site presentation. So this is an introduction to our company. Now we'll proceed to the next presentation. And now in technology and strategies. Hello everyone. I am Wells, PV InfoLink analysis. Now I'm going to talk about embracing ultra-high power modules, N-type and large module technologies. Although there is ongoing COVID-19 pandemic, the end market is still seeking to achieve a lower BOS cost and LCOE. This has contributed to a growing trend to adopt high-power modules, as well as to corresponding improvements in cell and module technology. So we will begin from the large format today. This presentation will also cover size trend, cell technology, and module technology. When you use large formats, you also need to adjust the module technology accordingly. And so we will focus on these 3 parts and then our conclusion. First, let's look at the size trend. For size trend, we can see projects with older designs are causing G1 and M6 to coexist as the mainstream sizes during the second half of 2020. In 2021, we see for M6, the trend for large format persists, so M6 will go up to 42% in share. In 2021, companies have also increased M6 production. So you can see for G1 and M2 have smaller share. In 21-22, we see that M10 and G12 are starting to gain market shares. Here, we need to look at G12 specifically. Corresponding modules have mainly 4 or 5 roles. We know that impacted by certification and transportation, glass capacity, and balance of system costs. That means the production of large-size modules will not rise too quickly. We also forecast that in 2022-23, there will be a switch to M10, and in 24-25, there will be a switch to G12. Impacted by the per watt cost of wafers, market acceptance for M10 and 12 is still stagnant. Coupled with G12 and wafer yield rate, their timing for mainstreaming has been delayed. After we talk about size trend, now let's look at wattage is also affected by another technology, which is cell technology. So now let's look at the developing trends in cell technology. Let's look at the graph on the right first. Here you can see the orange parts represent PERC module demand. We can see clearly in between 2020 to 25, mono module demand is mainstream. And then for the yellow part, that is N-type module demand. And because of cost and market acceptance, the demand share is relatively low. We estimate that in 2022, N-type demand will see significant growth because in 2021, there is going to be a ramp up on N-type. So with this kind of significant ramp up, N-type cost and the module cost will continue to close. So we estimate that in 2022, there will be a growth in demand. And for N-type share is rather low right now, but we can see starting from 21 to 25, the share is slowly growing. So that shows that global demand for N-type is growing. Now, after seeing the overall module demand, now let's look at N-type specifically. N-type cells still trail PERC cells in terms of large formats and cost reduction achieved by large-scale capacity ramp. For PERC, it's facing, well, actually, N-type is facing poor sales inability to compete with PERC sales profit. This is leading to poor sales, and also N-type cannot compete with PERC sales. So there's clear oversupply in N-type. For N, there is a narrowing of the cost between N-type and PERC. Between 2025 and 2025, capacity utilization rate will improve from 35% to 55%. So, and as PERC cell efficiency nears its limit, all Tier 1 makers all planned line upgrades and ramp-ups. Most TOPCon makers are also expanding next year. With most TOPCon makers expanding in 2021, the economic scale will push TOPCon cell costs close to PERC. As I mentioned before in the previous page, we mentioned that in 2022, the module market share will see more clear growth. And finally, let's zoom in on the details. Within a year or two, we analyzed that in TOPCon, the capacity and production will be higher than HJT. This is because of the ramp up and orders. And for TOPCon, we can understand that in terms of its capacity, because of the capacity compatibility and the investment in equipment are both better than HJT. So in 2021-22, in terms of capacity, TOPCon will be better than HJT. So this we will see next in HJT and TOPCon detailed breakdown for each company. And from here, we can see that trend. And here we can see for HJT and TOPCon, the details by producer and their ramp-up plan next year. We can see that TOPCon makers are mostly expanding next year. Jolywood, SPIC, Jinko, and LONGi both plan to reach gigawatt level capacity. LONGi is also planning to start production shortly. For TOPCon, the ramps have been delayed this year due to wattage leap by PERC, and there is a delay in the completion, and next year should see more of TOPCon projects realized. Let's also look at HJT. We can see they also have some ramp-up plans. For example, for Tongwei, we can see next year, after the expansion is completed, they will reach gigawatt level capacity. And we forecast Tongwei to complete its installation next year. And I should also mention Kaisheng. We estimate Kaisheng to also finish installation next year, and it'll reach 500 megawatt. And I should also mention Mayberger. It has transformed from equipment to a cell maker. So next year, it will also reach 400 megawatt. So we are optimistic about its ramp up. Another one to look at is Tianhe. For Tianhe, it's for TOPCon cells and modules, it is quite strong. But for Tianhe, which is Trina, we can see a few points here. One is HJT process. Compared to TOPCon, the process is smaller. And in terms of the cell quality, it's not inferior to TOPCon. So top tier company like Trina will move from TOPCon to HJT research. For HJT, it looks like compared with TOPCon, the overall capacity in TOPCon is relatively low for a few reasons. First, because HJT has for investment into the line for per gigawatt capacity, basically you need to invest 600 million to 700 million RMB. So for TOPCon, in terms of upgrading its lines to 1 gigawatt TOPCon, you only need 200 to 300 million RMB. So in terms of equipment investment, because of this gap, HJT capacity compared to TOPCon is lower. HJT investment is higher, and initially, companies will try with a pilot line, and then after the pilot line is moving well, then they will start gradually ramping up. That is why in terms of expansion implementation compared to TOPCon, HJT tends to be slower. Now let's look at TOPCon in details. For TOPCon, over gigawatt capacity includes Zhonglai and LG. So we estimate that Jinko and LONGi after next year's ramp will also reach gigawatt productivity. For Jinko, we can see that in the second half of the year, it has transformed into TOPCon capacity. So we think it'll reach gigawatt level next year. For LONGi, it's still under R&D, but based on our reliable information for LONGi, within the short term, they will continue to increase capacity, and it will be quite significant. So we are optimistic about LONGi development. For in terms of technology, HJT is about controlling the silver, and it affects the cell cost. And HJT is a low temperature process cell. So in terms of welding, if you cannot control it well, it's possible to further reduce the efficiency of HJT cell. For TOPCon, there are fewer problems in welding, but in terms of cell process, this is something that the manufacturers are trying to overcome. These are issues being overcome. So if TOPCon can improve its process, and the TOPCon efficiency will be further improved. Okay, after talking about cell technology, now let's look at the next thing. We talked about sizes, and the sizes are very much related to module technology. So let's look at that trend. This is the actual modules. The two photos on the left are G12 modules. For G12, as you can see here, there are mainly 6-row or 5 rows. And in the second half of this year, some companies have also come up with 4-row strings. So in next year and the year after, 4-row and 5-row strings will take up greater ratio. Now on M10, as we mentioned before, we estimate M10 to be mature somewhere between 2022 and 23. And here I want to highlight one point: whether it's G12 or M10 modules, both use small spacing and tiling technologies. So this is high density technology for both. So let's now look at how module technology and size trend go hand in hand. Here you can see from the graph on the right first, in 2022, which is this year, as mentioned before, for cell size in G1, this is the mainstream this year. So we can see that in 2020, the half cut takes up a higher percentage. And for M6, we talked about the second half the year demand rising. So for M6, it's for the module, it's half cut plus MBB technology. So we can see this year you will have the same share. In the future, we can see development in M10 and G12 pushing high density technology and the share to continue to increase. Now, for the yellow parts, this is tiled high density module technology. And this falls under high density module, but because of its special process, we talk about it separately. Why is tiling in 2020 and 21 have smaller ratio? This is because tiling is limited by patents. So to produce tiled modules, you need to have agreements with the patent-owning companies or to obtain licensing. So for tiling modules, there is a limit in its development in the next few years. Overall, module technology and large format development are going hand in hand. After talking about the modules, now let's look at bifacials. Actually, for bifacials, it's a very interesting topic to explore. Bifacials, in terms of their actual performance and data and their price, are being promoted by the company and accepted by the market. And we can see that for bifacial modules, in terms of power output, it can be boosted by 10 to 20%. As the price difference between single and bifacials narrows, the market is growing more accepting of this product. So we can see bifacial as the mainstream in the future. We also see here that for N-type cell, the productivity continues to grow. So we estimate that more and more N-types will use will be used in bifacial modules. What is the benefit of bifacial cells? Bifacial modules are advantageous compared to PERC cells because N-type bifacial can reach 80 to 90% ratio, and also for temperature coefficient compared to PERC, it also has higher performance. Next is under low light levels, N-type cells has better efficiency. So using cells in bifacial module is beneficial to boost efficiency. And now on bifacials, we also need to talk about glass format. Some makers prefer glass format, but right now it's being impacted by glass shortage and also fluctuating and growing price of glass. So during the transition period, large makers are continue to look for alternative materials, and those materials are mostly transparent backsheet. And transparent backsheet has a cost advantage. The second alternative is ultra-wide float glass. The greatest difference from normal PV glass and ultra-wide float is the latter has lower transparency due to its process. This impacts the module output. However, before 2022 and 2023, with glass shortage, these alternatives are indispensable. Now let's look at the conclusion. In conclusion, we see that in 2021, G1 and M6 will coexist. Looking forward, that was 2020, and looking forward, the market will continue to shift to large sizes to M6 and then M10 in 2022, 23, and then in 24, 25, G12 will become mainstream. Market acceptance of M10 and G12 is still low due to wafer costs. And so it extends to the timeline for the two sizes to become mainstream. And we see a shift to 6-row stringer. Now for N-type, we see module demand still focuses on PERC. And looking in further details, we see that in the next year or two, TOPCon productivity and output will outperform HJT. For module technology, we also saw earlier that high density assembly, meaning large formats in cells and wafer are related. So in the future, bifacials will become the mainstream. However, it's facing glass shortage in the supply chain. So manufacturers are also finding alternative materials, now focusing on transparent backsheet or ultra-wide float glass as the transitional alternatives. So that concludes my presentation on embracing ultra-high power modules, N-type and larger module technologies. Now let's invite strategic analyst March Chain to talk about a post-COVID-19 outlook, the future of global solar supply chain.
大家好，我是 PV InfoLink。
Hi, I'm Mars from PV InfoLink. So we have talked about the PV supply chain from the poly upstream to the module, the downstream, and also technologies. And here, my term, this is my presentation. I'm going to talk about the solar PV sector. And also, this is the last segment of this PV supply chain. And lastly, I would like the next two presentations will be ESS and also offshore wind power. Okay, here my presentation will be divided to three parts. The first one is that I would like to talk about the global PV demand overview next year and what are the market with the highest demand. And then I will talk about individual markets. We will talk about more than the big markets, the traditional ones, and we will talk about the emerging markets in Central and South American markets. And lastly, I will give you a conclusion. And this is the outlook and forecast of the future for your reference. Okay, number one, let's talk about the global PV demand overview. Next year, we forecast that there will be 143 gigawatt in terms of module. And on the left-hand side, you will see China, Europe, US, and India. The four big markets will account for more than 70% of the market, particularly China. It will account for 35%, 32% of the total market. So the Chinese market actually has been very important or influential to the PV market. And now on the right upper corner, we see that it's different from this year. Starting next year, you will see the first half, we believe that the demand is high. Why? Because number one, this year we have the COVID-19 this year. Therefore, some government's policies will depend to postpone their some projects or delay it to be administered or executed next year. Therefore, some of the project has been postponed to the next year. Therefore, we think that the first half of next year, the demand will be high. Secondly, we will see that there are very good market demand in the next year. Therefore, we will see that overall the PV market will be very robust. So on the upper corner, right-hand corner, you will see that these are quarter-to-quarter comparison. You will see that the Q1 and the Q2, we say that they will be stronger because of the postponed projects and also some of the postponed shipment or order placements. So this will be different from previous years because usually the first half is the low season, but not next year in the 2021. And then the lower part, we will see the module demand, capacity, and price trends. The previous analysts, previous speakers already covered it from module, from cells, from wafers. I will not repeat what I have seen. But here you will see that compared to this year, we will see that the demand is growing next year. But the demand is still lower than capacity. So overcapacity or oversupply is still there. Therefore, we will see that the price drop will be quicker. But the price is still relatively at a higher point because we will see that in Q1 next year, we will see that the glass capacity is released compared to Q4, then we will see the difference here. When we have more supply in glass, then we see that the overall prices of glass will be downward. And now let's look at the analysis of individual key PV markets. Here, I will talk about China, USA, and India, and also Europe, these major markets. And then I will move to emerging markets for our analysis. Now let's start with China. Okay, in China, we will see that actually next year will be a very promising year. Why is that? Because next year it will be the first year of the 14th five-year plan in China. Therefore, the provincial governments gradually release their planning. So far, we haven't seen concrete or detailed plans yet. But overall, the next year in the long term, we will see the direction of the market. For example, next year, there will be less subsidy and it will move into a grid parity and also green energy trading era. Under this situation in the future, when we see demands from China, it actually have to satisfy the provincial government's renewable energy generation need. Therefore, we see the PV demand will grow steadily in the long term. Another particular thing I would like to see that because we say that it's higher than neutrality. We will be more optimistic than neutral. And here, we must look at the policies here. when we see because of the 14th Fifth-Year Plan, the demand will grow steadily as the market becomes grid parity and green energy trading driven. We believe that the demand will be higher than what we have forecasted previously. And then let's look at what will happen in the year 2021 in China. Here, on the left-hand side, you will see that the demand is estimated to be 44.5 gigawatt in China. And you know we have grid parity projects and auction projects. And we know that there are still some subsidies. And we believe that in the fourth 15-year plan, that there will be these four sectors: grid parity, auction projects, residential projects, and others. On the right-hand side, then we'll focus on the 2021. Then you will see something special here. In terms of the projects, you will know that most of them are auctions. We don't have that many grid parity projects yet. At the beginning of next year, the price will still remain very high. The first half of next year, the prices will be at the level of a grid parity. But the thing is that we would like to compete on the auction projects. And in Q2, the reason why it will be robust, that's because the rules for auctions will be the same. So no later than June 30th, those projects need to be executed. So the first half of next year, the rules of the game will be the same. And then we will have more grid parity projects. And then we believe that the prices will be gradually go down, but not very much, because it actually can still be sustained, because in the second half, the price or the segment will be replaced by grid parity segment. Okay, now let's move on to India. It's a pity year for India. Why did I say that? Because we know that the epidemic, the demand was high previously in India, but this has been not so good year this year for India. And we also know that there are some trade frictions between India and China. Therefore, the shipment, the order placings hasn't been very well. And at the same time, India has been relatively more sensitive to prices. Therefore, the demand has shrinked. So overall, the demand in the Indian market has been weak. But next year, if it's a post-COVID-19, then we believe that we will have a rebound. Demand will rebound as prices decline in the post-COVID-19 in the year 2021. And there is a 100 gigawatt goal set by the government. So far, it hasn't reached. It's still far from the goal yet. But we believe that India will still moving toward that goal. Therefore, for the long term, we will still be optimistic for that. Another point for India, worth noting is that the duties. They have the safeguard duty, and we know that compared to previous, actually about the same. And previously, it's about 15%. Now it's 14.9%. And next year, it's possible to be reduced to 14.5% next January, but not much difference. But another is BCD, the basic custom duty. And the government found that if they have BCD and also safeguard duty together at the same time simultaneously, they will be against the WTO agreement. Therefore, that is why we haven't seen clear announcement of the basic BCD. Therefore, maybe we will see the end of safeguard duty by the end of July next year. Then we will see how much the rate of the BCD will be. So far, there are a lot of opinions, but the basic custom duties for between 20 to 50%. And now let's look at the India's next year forecast. And again, we believe the auctions will be the supportive force. Here on the left-hand side, you will see that this year, the overall from January to October 2020, this is the auction projects, totaling 9.3 gigawatt. So overall, it's still booming. So among the 9.3 gigawatt, actually most of them are the large-scale developers, big developers, because these are the auction and the big projects. The large developers will remain dominant here. The smaller ones will be, it's hard for the smaller ones to survive in this auction market. On the right-hand side, we see that quarter by quarter, we believe that there will be a bottom out next year in India. And here, we believe that in Q1, there will be very good demand. And then the Q2 will be a modification quarter. And then Q3, Q4, they will be climbing up gradually in terms of demand. And now let's talk about USA. Okay, in the US market, overall, it's initiated by ITC, investment tax credit. That will be, we will see, and because of ITC for the long term, we believe that by the year 2023, the forecast is still supportive. I mean, since 2024, once the ITC expired, we will see what will happen. And we see that the forecast is 20 gigawatt. And we know that overall, we have Joe Biden as the newly elected US president. From this point of view, we will see that because he will inaugurate January 20th, 2021. So this year, the demand will remain about the same. And next year, we will say that because he's newly inaugurated in January, so we think that there's still a process of adjustments. So within the short term, we will not see big changes in the year 2021, 2022. It's possible that the situation will be different in 2023. Here, the dark gray areas, you will see that, and some of them are lighter gray here. That means we believe that after the inauguration of Biden, it's possible there will be further spur up of the demand. But market will enter a transition period after ITC sunset. So here, that's why we put a lighter gray area here. And here, we see that overall, we have seen that the Chinese export of modules to USA is still difficult because there are trade barriers between the two countries. And there are three tariffs. One is anti-dumping duty and the countervailing duty, and also the Section 301. So these, we believe that the cost to export modules from China to USA is still very high. So this is a barrier. So if you want to ship directly modules from China to USA, really the cost is too high. It's not feasible, not profitable. But if that's not feasible, then what else? Then modules, here you see this, the second from the right. The modules produced in Southeast Asia will be prioritized due to trade barriers. And we know that Vietnam is now under the 301 section investigation. So here we have this gray, light gray areas that will still, if the Vietnam will be imposed the highest duty rate, 25% of the 301, the tariffs, then this is still a factor. But overall, we will say that they in Southeast Asia, the modules can be shipped from Southeast Asia to the US, still profitable, even if Vietnam is imposed the 25% of the duty. Now let's move to Europe. Here, and at the beginning of this year, we thought that the PV market will be hit hard because the countries, they were putting curfews, and also they have postponed the PV grid connection, and EU have been tackled with the COVID-19 by lockdowns and curfews. But actually, we have seen that the impact of COVID-19 has not been that hard. And actually, the demand has picked up in Q2 this year and reaching a peak starting from Q3. So here we will see some possibilities here. We will see, we know that even though we are facing the second wave of COVID-19 pandemic, but still the control measures put by the governments are still lesser than those in the beginning of this year. Therefore, we believe that the impact will be less in the market. So therefore, as long as you will be able to go there, and the government will not lock you down at home. Therefore, in terms of the installations, will be influenced less. So the project installation can be operated, can be conducted. And another thing is module prices will maintain at a high level. So far, we have seen that the overall, the installation performance, we haven't seen being hugely influenced. And the overall European market, we believe that the long term is stable and healthy and probably slightly growing. So here for the long term, we hear that for traditional markets, Germany and France, then these markets will be healthy. But overall, the demand will increase or not depends on the emerging market in Europe. So here we see on the left-hand side, 26.65 gigawatt totally, and it will be concentrated in the first half of next year. And the second half, there will be a shipment and installation. For the long term, the overall demand is stable. That means compared to this year, I would not say it's a robust growing, but it's stable. Now let's move to emerging markets. Here, we will start from Latin America. Latin America, the demand next year will be 11.35 gigawatt, mainly in Brazil, Chile, and Mexico. We will see the demands next year will be looking good. We can see Colombia, El Salvador. We believe that their demand in these countries will go higher. For the long term, it's still a growth trend. And here, we will look at the Middle East. Then Middle East, mainly in the utility scale projects. And we have UAE, Israel, Pakistan, Turkey. And here, totally 7.4 gigawatt. When we see UAE, we see their utility scale projects are expected to drive our demand. So long-term forecast is still very optimistic. And then let's look at the APAC market. We know that totally in APAC, we have 19.2 gigawatt demand, and mainly Japan, South Korea, and Australia. But on the right upper corner, you will see that next year, the weakened Vietnamese, Japanese, and Australian markets slow demand. But for the long term, we believe that this is very stable. So overall, the conclusion here is that we believe that next year, 2021, we'll see a 19 gigawatt scale markets. So the global solar market looks bright. On this table, we'll see most of them, we are optimistic. So we have an expectation on these markets. So overall, it's the conclusions here on this page. This concludes my presentation. I would like to give the mic back to our next speaker.
Thank you to the analysts for their insightful presentation. That will conclude our PV section. In conclusion, for PV, the demand will still be robust next year and even outperform this year, reaching up to 145 gigawatt. And PV next year, the cost will still be on the high end, and the product will be diverse. So if you want to learn more about this, you're welcome to leave a message or contact us. And next, we will play a video from our sponsor. After the presentation, we will talk about our ESS and green energy. Now, our sponsor, Jinlong Solace.
再次感谢锦浪科技对本次研讨会的赞
Once
助。
more, we would like to thank Jinlong Solace for their sponsorship. Now we will go into the ESS and offshore wind energy section. First, I would like to introduce our analyst, Dr. Feng Yuan. He, with a doctorate degree in chemical engineering from Tsinghua University, has more than 6 years of R&D experience in lithium battery field. And now let's welcome Dr. Yan to analyze the market overview of battery cells and components, rapid falling cost of electric vehicle battery, grid-scale battery storage for now and the future. Hello, everyone. My name is Fang Wei Yuan, InfoLink ESS analyst. Infrastructure for renewable energy and energy storage is an irreversible trend now. So today I'd like to brief you on rapidly falling cost of EV battery, grid-scale battery storage for now and the future. Here's my agenda. First, grid transformation. Overview of energy storage policy, how power batteries lead battery storage development, cost analysis, and ESS price forecast. Lastly, industry chain and major stakeholders and analysis of key players and case study. First, why storage energy in a grid? A few key factors here. First, renewable power generation, like wind and PV, is intermittent in generation. So if the ratio is over 30% and it cannot be replaced, then it's easy to cause a major outage in the grid, and this will create serious economic impact. Third, wind and solar are being abandoned in some regions where they cannot connect to grid. These factors highlight the necessity for storage or ESS in the grid. So with these three reasons, we need to add energy storage into the grid. The grid has three parts: generation, transmission, and distribution, and user. ESS can be added to every part. This will also change the grid from a conventional centralized one to distributed, with its greatest feature being high optionality and flexibility in provider, even on the user end. That means individual users can also control generation and use, become the master of their own electricity use. There are 5 types of ESS based on property, including electrical, mechanical, electrochemical, etc. There are over 10 types in use, each with its pros and cons, of course. If we make a graph to compare two key properties, first, system response time, two, storage capacity, and then also they have different applications in the grid, and if we compare them, we see electrochemical to have the widest application within the grid. That is also one reason why lithium-ion battery and its storage is drawing so much attention. Naturally, profit is always core when companies are entering a new sector. And there are over 20 profit models for ESS throughout the grid and even in the external society. At the generation end, for instance, it helps with peak valley and frequency modulation and black start in terms of profit module. At the user end are time of use bill management, demand charge deduction, and raising PV self-consumption. Externally, there's carbon abatement, environmental benefits, system and personnel safety, etc. For example, Tesla in the last 2 years is selling corporate carbon emission at a decent profit. This is a great example and typical example of profit from the external environment. Of course, when you have a new policy and you want to promote it or implement it fully, policy support is indispensable. So now there are many ESS subsidies worldwide. For example, ESS in China is nascent. So subsidies are mainly for companies building infrastructure. For more mature countries like Australia, Japan, Korea, US, UK, they are more mature, so subsidies focus on users. Policy incentives have real benefit on accelerating energy storage. A very typical example is electrical vehicles in China. Thanks to policy support, it's seeing very rapid development. In terms of policy, let's use China as an example. Some provinces in China already have mandatory requirements on over 5 to 20% of energy storage system in new wind and solar stations, with more provinces joining in. Based on current policies, the known minimum energy storage requirements over 1,000 megawatts. With other regions joining and policy stimulus, the optimistic forecast for China is 10 gigawatt hour installed storage capacity in 2021. Development in lithium-ion battery can be attributed to the rise of EVs opening a big door. Global EV sales in 2019 exceeded 2 million units in China, with over 100 gigawatt hour in installed power battery. Although the pandemic this year has slowed the growth, we have a bullish forecast that in 5 years, the global EV market will exceed 10 million units and over 500 gigawatt hour in installed battery. This market stimulus has cut lithium-ion battery price by as much as 90% in the last decade. Another easily overlooked key factor is energy density has risen by 40 to 50% in the last 2 years, all contributing to rapid deployment in many sectors. With drivers like policy support, emission reduction, and market stimulus, etc., The commercialization of lithium-ion battery in ESS still depends on its levelized cost of energy, or LCOE. With drastic cut in battery price and technical upgrade now, LCOE for lithium-ion is about 10 to 15 cents US per kilowatt hour, making it commercially viable. Why is it commercially viable? Let's look at average electricity price worldwide in 2019. Most developed countries like UK, Australia, and Japan, etc., have average residential electricity price over 20 cents US, even up to 30 cents in Germany. So LCOE for lithium-ion battery ESS is now economical. Our estimate is in over the next 5 to 10 years, with continuous improvement in battery technology, we estimate LCOE to go down to 5 cents. This makes lithium-ion battery ESS commercially viable worldwide in commercial, residential, and even rural applications. The application market for a lithium-ion battery in the next decade or even 2 decades is completely unhindered. Aside from a stable consumer electronics market, EV will definitely be the greatest market now and into the future. Meanwhile, the resulting market growth in energy storage cannot be underestimated, expected to replace commercial EVs to become the second largest market for lithium-ion batteries over the next decade. Based on current green energy policies worldwide, we also expect newly installed renewables to surpass 1,000 gigawatt by 2030. Accordingly, even our pessimistic forecast on installed lithium-ion battery storage is still 150 gigawatt hour by 2030. This number is 20 times to 40 times today's capacity. A bullish forecast puts it at over 500 gigawatt hour. That means it has a very astonishing speed of growth. ESS contains many components. Of course, at the core is cells. And there are also many power and battery management systems like BOS, BMS, and EMS, etc. Transformer and PCS also need to come in to convert DC into AC to form a complete energy storage system, ESS. Now we are ready to connect to the grid. I mentioned that the cost of battery pack accounts for the battery is at the core of ESS, and the battery pack cost accounts for over 50%. Price trend for battery can be seen in 2 stages. Battery costs dropped drastically in the last decade, with increasing concentration in the industry and companies. The decline will slow in the next decade. However, stiff competition will begin globally. When we talk about lithium-ion battery, whether it is in EV or ESS, we divide it into 2 types. The first is NCM, nickel, cobalt, and manganese, and LFP, lithium iron phosphate. In energy storage, the system price is 310 and 277 US per kilowatt, respectively. LFP is 10% lower than NCM because the raw material for LFP and anode is far lower than that of NCM. We estimate that over the next decade, these 2 types will have room to go down in price, in cost by 50%. So they will come down to 150 US per kilowatt hour over the next decade. Whether in EV or ESS sector, comparison competition between LFP and NCM is always a hot topic. The market also has clear differentiation between the 2. We can simply separate it into China and outside China. Why such separation? Many factors are in play, including policy, technical capability, application market, supply chain, etc. Currently, China favors developing LFP, and representative companies are CATL and BYD. In Japan, Korea, and the West, they favor NCM represented by Panasonic, LG, and Samsung. Uh, Although LFP has a clear edge in safety and price, its room for technical enhancement and for capacity increase is still limited. NCM, however, still has over 30% in improvement room in terms of technical upgrade. And price and safety can be overcome with technology. Hence, we are optimistic in NCM becoming the leader over the long term. That said, LFP and NCM will continue to coexist. The energy storage industry chain has a wide scope, from upstream generation fusing renewables to downstream application involving corporates and individual users. Anything related to electricity actually can be potential suppliers or users. But the entry point depends on a careful assessment of the capability. For instance, upstream utility stations require corporate assets and insurance and financing ability, while downstream favors business and user service, in our opinion. We divide lithium-ion ESS into three parts: battery supply, power electronics, hardware supply, and finally system building or integrators. Currently, key suppliers globally. Now we currently pay more attention to cells, i.e. the battery, because most battery suppliers still also supply power batteries, but storage is coming mainly from LG, Samsung, and Panasonic in Korea and Japan. And power batteries mainly still come from China. Another interesting thing to pay attention is cooperation between these companies and expansion upstream and downstream. So we can reference the trends in power battery for this lithium-ion battery trends. Our analysis of worldwide electrochemical storage over 30 megawatt shows in this graph clearly that most of the electrochemical storage is from lithium-ion battery. That means everyone is bullish in the energy storage using lithium-ion battery. Frequency and peak value modulation are the main applications there. If we look at output, it's mostly used for frequency regulation, whereas for energy, it's used in peak value modulation. This shows different applications have different requirements on battery properties. So applications should be considered in storage station design. Also, power stations are moving toward high power output and longer storage time. So the role of ESS in the grid is growing. Finally, in conclusion, we can look at by 6 points. First, the cost this year for lithium-ion pack and system are 150 and 300 USD per kilowatt hour, expected in 5 years to drop to 100 and 200 USD per kilowatt hour respectively. Installed capacity for ESS will grow from under 10 gigawatt hour this year to over 300 gigawatt hour by 2030, so by 30 or even 40 folds. In terms of policy, green energy or storage policies are being announced worldwide. Some provinces in China, for example, now have a mandatory storage requirement of 10 to 20% in newly built wind and solar stations. And the next thing is what we're very interested in, NCM versus LFP. Although NCM has lower cost and safety, however, it will although LFP has lower cost and safety, it will also drive advances in NCM, and the two will continue to coexist in the market. Currently, the LCOE for lithium-ion storage is 10 to 15 cents US per kilowatt hour. It has no economic viability, and in 10 years, it may further drop to 5 cents with continued cell cost cutting and technical enhancement. Globally, new storage stations are moving toward high power output and longer use time. So in conclusion, this shows that ESS is playing an increasingly important role in the grid, and it is becoming indispensable. With that, I conclude my presentation. Now I would like to hand over the time to Sharon Chen.
Hello, I'm Sharon from InfoLink. Today, I'm going to talk about the offshore wind energy outlook Asia markets. In the year 2019, actually, this has been a very good year for offshore wind installation. And totally, we have seen the 6.1 gigawatt, and that we see number one is China, 2.4 gigawatt, UK, 1.8 gigawatt, Germany, 1.1 gigawatt. In the year 2019, China take about 40%, UK about 30%, Germany is about 18%, and Denmark 6%. And here we expected that the offshore wind installation will enter into a big growth. And we know that the total will be 53 gigawatt, and the main growth will come from Asia. And now I would like to see that in the year 2019, Europe has took 60% of the market, and the situation will change in the year 2025 because APAC, Asia, will take 60%, and Europe will be 40%. Among Asian countries, Japan is the first country in Asia to enter the offshore wind market, having rolled out the region's first offshore wind turbine in 2003. But not until 2018, the Japanese government had development policy for offshore wind installation. And also we have seen South Korea, Taiwan, and Japan. These are the three emerging markets that have great potential for offshore wind capacity growth, 10 gigawatt by 2030. And actually in 2018, Japan has the fifth strategic energy plan launched. Japan aims to raise its renewable ratio to 24% by 2030 in the year 2019. Solar PV accounted for 87% of Japan's renewable energy mix, whereas wind comprised just 6.5% only. Of the total installed wind capacity of 3.786 megawatt, offshore wind made up only 65.6 megawatt. And under the Act for the Promotion of Use on Marine Areas for Development of Marine Renewable Energy Generation Facilities, introduced in 2018, developers can bid for the right to lease wind farms in general sea areas for a maximum term of 6 years. That's very good news. And while Japan has installed 66 megawatt of offshore wind capacity, more than 16 gigawatt of projects are in the process of environmental impact assessment and review. Japan's installed offshore capacity is forecast to exceed 10 gigawatt during 2025 to 2030. And among emerging markets in Asia, Japan has the least strict regulations on the use of local contents for wind project construction. So prices are the key to securing a wind project of country. This point is worth noting. And now let's move on to the overall Japan market. We will see that from the north Hokkaido to the south, North Kyushu, 10 designated sites for offshore wind farm announced in July 2020. And you will see that they have 6 promotion zones in 2019 and 4 promising areas in 2020. And the wind farm at each of the designated sites has an estimated capacity of 400 to 1,300 megawatts. And auctions for the 10 offshore wind farms will be wrapped up by the end of 2020. And particularly in the south, the North Kyushu, we see that the first auction for a 21 megawatt floating project in Goto City, Nagasaki, this has been extended to December 24th. This year, due to the COVID-19 pandemic, results are expected to be announced in June 2021. And then let's look at Vietnam. In 2019, the hydro, solar, and wind respectively comprised 75%, 23%, and 2% of Vietnam's renewable capacity. And under the draft Power Development Plan A, Vietnam is going to raise its installed renewable capacity to 30.8% by 2030, with 14.5% of it being solar and 13.8% wind. And according to the plan, the 13.8% target of the wind capacity is equivalent to 19 gigawatts, which will span onshore and offshore projects. And Vietnam's offshore wind capacity was 99.2 megawatts in 2019, and this figure may surge to around 10 gigawatts by 2030. And here in Vietnam, the PVP-8 project will be officially introduced at the end of 2020. So the current feed-in tariff rate will be extended to the end of 2023. And the wind farm development in Vietnam will be led by auctions after 2024. And although only 99.2 megawatts of offshore wind is in commercial operation, the government has approved 11.8 gigawatts of wind projects. Vietnam offshore wind capacity is forecast to begin surging in 2025. And there are 2 major projects in the Bình Xuân province, Thanh Long and Là Gang, and they will begin commercial operation between 2022 and 2023. These 2 projects will account for 7 gigawatts. And now let's look at South Korea. Under the Renewable Energy 3020 implementation plan launched in 2017, South Korea aims to raise the renewables ratio from 7.6% in 2017 to 20% in 2030. South Korea seeks to become one of the world's top 5 of offshore wind markets by bringing the installed offshore wind capacity from 124.5 gigawatt in 2019 to 12 gigawatt by 2030, which will account for around 24% of the total installed renewable capacities. And the offshore wind development take place mainly in the southwest until 2030. Specifically in North Jeolla province and the South Jeolla province and Jeju Island. And the Ulsan city will be key development for the floating wind projects. Together, they will have 17.8 gigawatt of the wind project in the pipeline. And here we see that South Korea has a clear policy framework for offshore wind development. And actually, they have a paper promoting mutual benefits between local residents and fishermen from the development of offshore wind. And this identified the key offshore wind development zones, including the plan to engage R&D to optimize wind turbine cost and achieve domestic production of 8 megawatt wind turbine by 2022 and 12 megawatt by 2030. So South Korea has a very clear domestic turbine production plan. And the medium and long-term goal is to develop floating wind technology with 4.6 gigawatt of wind farms to be built by 2030. And the South Korean government have the local content requirements. And in order to support South Korean wind turbine manufacturers, putting up a high threshold for foreign investors to enter the supply chain. And now let's look at Taiwan. Taiwan has set a goal of 27 gigawatt of total renewable energy generation capacity by 2025, with wind power accounting for 23%. The goal includes a 5.5 gigawatt target for offshore wind capacity. An offshore wind target is to install 1 gigawatt every year over 2025 to 2035, 10 gigawatt in total. The offshore wind industry will be developed in 3 phases: demonstration incentive plan, zone application planning, and zonal development. Now let's look at the 3 phases. The first one, DIP. There are 2 demonstration wind farms. One is Formosa 1, 128 megawatt, and the other one is Taipower 1, 109.2 megawatt. And because of the COVID-19, the grid connection will be postponed till Q2 2021. And then phase 2 is zonal application for planning. The 2020 to 2025, 5.5 gigawatt will be commissioned. Among them, 3.5 gigawatt will be by selection and 1.7 gigawatt by auction. And local content requirements need to be satisfied. And then phase 3, zonal development. From 2026 to 2035, Taiwan is to release 1 gigawatt per year. And there are 2 steps for process. One is for selection. They will be by the end of December this year. And developers' capacity will be reviewed. And the second part will be bidding. And again, local contents requirements will be satisfied. So phase 2 and phase 3 both have local content requirements. And then rules for developer selection for the zonal development phase 2023 to 35 will be released at the end of 2020. And the new phase now see 2.9 gigawatt of bids from developers who have passed an environmental impact assessments, bids from new entries, InfraVest, Stone Peak, and WPD, total 17.6 gigawatt, but the developers has yet passed the EIA. And over 10 developers have offered bids of more than 20 gigawatt at the zonal development phase. What we know now is that in about 2 gigawatt will be selected in the year 2022 and 1 gigawatt at the Q2 2021, and then this is actually phase 3.1, phase 3.2, and the EIA content and the financial criteria need to be passed by the developers. And in terms of offshore wind turbine foundation technologies, mainly the floating offshore wind technology, and we covered the 4 markets in Asia Pacific. And 80% of the world's offshore wind resources potential lies in water deeper than 60 meters. And we know that the floating offshore wind platforms are divided into 3 types. One is TLP, tension-led platform, a spar, and the third one, semi-submersible. The world's pioneer floating offshore wind project is in Highwind, Scotland, run by Equinor and comprising 2.3 megawatt with SPAR, the second technology. And the biggest floating offshore wind project is also in Scotland, the Highland 10-pin projects, totaling 88 megawatt in capacity, developed by Equinor as well, and due to begin commercial operation in Q3 2022. And also, when we look at the Europe is a place that have the many offshore or floating offshore wind project pipeline, but we're looking at the APAC, and here we see that in APAC, the floating offshore wind project mainly is from Japan. Japan totally now have 19 megawatt, and then we see that there will be Taiwan. There will be Korea, South Korea joining in. There is the Donghae 1, 2024, South Korea, And totally, we see the project to be built by 2025, that will be totaling 221 megawatts. And by 2030, on the right down corner, projects amounts to be operated, then mainly from Japan, South Korea, and Taiwan. And South Korea, the are some floating will be 1 gigawatt. And Formosa 4 from Taiwan in 2024, it will be 4.4 gigawatt, so totaling about 10 gigawatt in the pipeline. So this will be the floating offshore wind project in the pipeline the next decade in APEC. This concludes my presentation. Thank you very much.
This concludes all our presentations today. Thank you for listening. We took a look at the questions raised today. Most of them center around PV prices next year and product trends. And also, lots of you are interested in bifacials and other trends. So I would like to quickly answer to these questions. This year to next year, we'll still see a bullish market. The whole year next year, in terms of demand, we have 140 gigawatt in demand, but in every quarter, there are still peaks and valleys. So questions about exchange rates and prices, all these will affect price fluctuations between high and low season. Next year in the supply chain, the shortage is mainly coming from glass. And in the Q&A, we can see that everyone is concerned with the supply and demand in glass next year. In Q1 next year, especially after Chinese New Year in China, the demand will lessen. So right now we think the tension in glass shortage will be eased after the Chinese New Year. As for large formats, we also see lots of questions concerning that. For large format, in terms of cells, wafers, and modules, there is no productivity bottlenecks. Overall, next year, it'll be applied to utility project. As for rooftops, there will be 158 or 166 mainly. In terms of PV, that's what we see. So after we wrap up today's seminar, you will see on the screen a feedback survey. So we would appreciate it if you could take time to provide your feedback. And you will also receive a link in a follow-up email. So we would really appreciate if you could take a moment to answer the survey questions so we can improve on future events. We hope you find today's content helpful. And we will also send out our slides for today. Thank you very much.